All right, so the rundown of our Discord. You guys can all see my screen, right? Yep. Okay, great. So I'm just gonna go through the most important channels. I'm not gonna go through every single channel because you guys can easily access them. The main channels that I want you guys to pay attention is the announcements. We put, if we have a class, we have the schedule right in the announcements page. I post the economic calendar every single morning because, these events do affect the market. So it's good to have an idea of what meetings are going throughout the day. So the announcements page is very important. The invite link, this is if you want to refer anyone, you type in $ refer, you copy that link, you send it to your friend or family or whoever it is, and you get 15% of your membership for that month. So you get 50% back for that single month. Not every single month, it's just that month. So let's say you refer two people in the month of June, your membership cost for June will be 30% off. All right, so type in $refer, copy that link, send it to your friends. Suggestions, if there's anything that you guys want us to change or update, please put it here. We're always open to, improve our server. So feel free to add, anything in the suggestions channel, merchandise if you want merch. This is the biggest, obviously this is where you guys make the money or, lose money. Um, Mostly winning money, making money. The trading alerts. And I'm going to run through that right now, actually. And before I run through that, um, I know a lot of people have Robinhood accounts, which is fine, just totally fine. It's not a big deal. But you guys have to be aware of the pattern day trading rule, right? So you have 3 day trades in 5 business days. So that is if you're buying and selling the same day. So if I buy an Apple call, I sell that Apple call 5, 10 minutes later, hour later, 2 hours later, doesn't matter if it's in the same day, right? That is a day trade. Okay, so I have 3 of those for 5 business days. Now, if you sign up with a cash account, if it's with Fidelity, if it's with TD Ameritrade, any other broker, a cash account allows you to day trade as many times as possible until your funds run out for that day. So let's say I have $1,000 in cash in my account. I can day trade as many times as I want until that $1,000 is done, right? Whatever you make or lose, it will be cleared the next day. Okay. So if you want to sign up for a cash account, which I highly recommend because Elkin does a lot of scalping, I've been doing some scalping, Kindred, Eva, they've been doing scalping, right? So you don't want to be stuck with a pattern day trading restriction because you kind of want to get out of that position, right? To secure your profits because you don't know what's going to happen the next day. Okay. Now, if you want to sign up for a cash account, again, we don't make any money off the TD Ameritrade referrals. Even though we've probably referred over 100 people to TD Ameritrade, we don't make a cent. I posted the instructions on exactly how to create one. So if you guys want to have a cash account, the instructions are all here, right? I screenshot every single step. So with that being said, we're going to go straight to the alerts and make it very simple with you guys. Elkin is going to talk more about it. I'm just going to do a quick explanation on how to place these orders. So let's go with this example. Jamia. Jamia is the ticker, okay? 35 is the strike, meaning that if Jamia right now is at $32, I want Jamia to go as close as possible or above the strike of $35, right? The closer I get to 35, the more money I make. Okay, in the simplest terms. Again, Elkin is going to go through what affects these premiums, okay? But I'm going to make it very basic. A call. A call is that I'm betting that the stock is going up. I am bullish on the stock, okay? That's what a call is. 7/17 expiration is when the contract expires. So I have so for this contract, I have a month and 15 days until this contract expires. Okay. 264 premium. 264 equates to $264 for the option contract. So that's one contract is going to cost you $264 a premium. Okay. And when I say a 40% personal stop, that means that if anything goes bad on the trade, I'm going to be able to risk 40% of the premium I paid. Now, everyone's risk is different because everyone has a different account size. Don't just say, yeah, or just look at my personal stop and say, yeah, I'm willing to risk 40% too, right? Just because I'm saying that. I might have an account that's 10 times, 100 times bigger than yours. If you have a small account, maybe it should be a 10%, 20%, right? But we always make sure that if the trade doesn't go our way, we will have a stop loss. Rather than losing 100%, we might just lose 20%, 30%. Or sometimes, if it's not that too expensive of a premium, we'll risk the full amount. We'll say full risk, but again, doesn't mean you should risk the whole amount, right? Because again, you guys might not have a big account as someone else. Okay, so that's what a personal stop is. So again, Jamia is the ticker, 35 is the strike. So we want to get as close or above the strike price. That's where you make the most money. A call is I'm betting that the stock is going to go up. 7/17 is the expiration, so that's when the contract expires. 264 premium is how much I'm paying for the option contract. So 264 equates to $264 per contract. And again, we will always alert the buy and the sell. Okay, so we don't, it's when you're a beginner at the Discord, it's okay if you ask us, hey, are you still holding this? Because you might have not seen the alert. But we will, if we're up or if we're down on the stock or the option contract, if we haven't alerted a sell, that means we are still holding, right? But if it's not in your risk management strategy, if you are down more than what you can afford, you should most likely cut it, right? If it's not going our way, because some people have more risk than others, right? So, but again, we will always alert the sell. Any questions so far? What do you exactly mean? So,
Well, you put out the notice, and how long do I have to go ahead to Ameritrade and implement that?
oh, okay. So you mean like still not? I might not be getting your question. So you mean
I
how?
mean, you put out that notice. How long do I have to go ahead and put it into
Oh,
Ameritrade?
like the
Do
trade itself.
Yes.
Okay, yeah. So let's say I alert this at 264, right? Now, let's say it's at, for example, 290 by the time I alert it and you miss the trade. For the most part, you don't want to enter that trade because you're going to be paying $30 more than what we paid for, which probably means that we're probably exiting or cutting, most of our contracts, right? So that's called chasing. We don't want you to chase, you know, the alert. Again, hey, it could go higher and higher and higher, but for the most part, I don't want you guys to overpay for a premium. Now, let's say it's Jamia is at 270. You just got to ask yourself, okay, am I willing to pay $6 more for the premium, right? Which is obviously not much because a lot of the times it happens in our chat. We will make an alert, it's maybe $5 more expensive, by the time you check on your phone, and people will say, I mean, we make a joke out of it, but it's true. Move too fast. Well, it's $5 more, right? You guys, it's unless you can't literally afford a $5 more on the contract, you should still get in because if, when we make an alert, we are confident in the trade, right? But sometimes it might not work out, but we are very confident in the trade. So it really depends on what premium it's at by the time we alert it. We do our best to get the most accurate premium for you guys. We don't want to alert something and then 2 seconds later it's $30 more, right? We want to make sure it's very accurate.
Keon, I got a question for
Sure.
you.
Mm-hmm.
So, just for instance, on this one right here, it has a 40% personal stop.
Mm-hmm.
Now, for someone with a small account, like most of us in this chat, I'm assuming, are
Mm-hmm.
starting out with,
Yeah.
500 to 1,000 is what I was recommended.
Mm-hmm.
Let's say, for instance, you're at a 40%. What would you recommend somebody with a smaller account setting their personal stop at? And I know that it's different for everybody and
Mm-hmm.
their risk. But just, on average, what would you say a good personal stop would be for a small account?
Yeah, that's a great question. I think what you should always ask yourself, no matter what size account you have, is every trade you go into, ask yourself, no matter what the premium is, right? How much am I willing to risk? So let's say I have a $500 account, okay? And this premium costs 264, right? So that is, you know,
Gotcha.
that's
Over half my account.
exactly, right? So you want to ask yourself, okay, well, that's more than half my account. How much am I willing to lose? Okay, so for example, if I had that account, I would honestly maybe willing to lose like at most, you know, $100
Right.
or like $60, right?
So 20% would be good.
20% would be good. You don't want to make it too tight because sometimes the contract may start lower. You might already be down, 10, 11%, and then maybe a minute or two later, it could reverse, right? And that's very frustrating for some people, and it's frustrating for us. Randomly it could just completely reverse on you, but that's because your stop is too tight, right? You don't want to have a 5% stop, 6% stop, right? Make it reasonable. But again,
Gotcha.
for every single trade, make sure you know how much you're willing to risk. If it's a $500 premium, when you go in, say, okay, if it goes negative $150 and I was willing to risk $150, so be it. If it happens, it happens. You move on to the next trade. You followed your risk management and you move on, right? Because no one's perfect, you know? So, but just have that mindset. Have that mindset.
Thank you. Yeah,
Hmm.
that's really helpful.
Yep, no worries.
Hey man, just to make sure I'm getting like a stop loss.
Yes.
So let's say I paid a premium of like $100, and let's say I set a stop loss for like, I don't know, 20%. So let's say would my contract going down to like less than $20 like be like the stop loss, or
So
I don't know if
you
I'm right.
so you set that stop, right? So at a dollar amount, right? So whatever 20% of 264 is, you're gonna put that in your trading account, whatever that number is. If it hits that number, it's gonna stop out. Is that what you're asking?
Yeah, okay,
Hmm.
that makes sense.
Yep.
Okay, thanks, man.
Okay. Great. And then any other questions before I run through the other channels? You guys good? And then, so there are some a little more experienced traders here. Um, when Elkin and I say calls above this level, puts below this level, those are all our resistance and support lines that we have charted, right? So they are levels that there's an expected breakout or if there's an expected breakdown, right? And let's say we say Tesla above 605 for calls. Well, Elkin and I are seeing, or whoever made that, key level is seeing that if Tesla breaks 605, it's good to get calls, right? But you're still risking. We're just putting those levels out for you because we're looking at 10 to 15 other stocks at once, and we don't have time to maybe alert 5 of them. So we will put the key levels there. And again, Elkin will explain this. delta and theta are your best friend. Those are the ones that you want to really look at. So the key levels are there for you guys too. So you'll see me in the premium chat saying, hey, Apple above 130 or 125 for calls, and someone will enter a 125 call when it hits that level. So that's only for the more experienced traders. I don't want to make it even too confusing for you guys, for the beginners, but for the more experienced, those levels are for you guys. Now, premium chat is only for, anything related to the stock market, options, finance, econ. It's strictly for, trading, right? So that you guys can ask anything in here, talk about anything that's related to those subjects. So crypto channel, we just talked about crypto. I'm not going to go through this. So key levels, this is what I was talking about, right? So Elkin in the morning will post key levels. Okay, so once you get more experienced on placing orders, Elkin has these key levels for you guys already, because we might be looking at 8 different stocks, right? So if you're looking at these specific ones, if you guys put Beyond Meat, Square, Neo, Roblox, and Boeing on your charts, and you see that it hit one of these levels, it's giving you an opportunity to enter these trades. But you have to have the same mindset as if you're entering an alert, right? How much am I willing to risk? How much, how much premium I'm willing to pay, right? So these are there for you. But if you still don't understand the basics of options and you just want to go with the alerts, don't worry about this for now until you're more comfortable with, your broker, with, placing the orders, setting stops. And don't be afraid to ask those questions during the market too, because again, today's market is very slow and it's a great time to, ask as many questions as possible. Don't be shy. This is a place to, learn everything. Watch list is the stocks that we're looking at for the next day. We looked at it at night, just seeing how it moved the previous day, but it's our main focus for the next trading day. Owl's watch list is for you guys. Please put stocks that you guys want us to look at, or what stocks you guys are just looking at, right? Maybe Arlie is saying, can we get a bounce on Apple? You make a little joke out of it, but he's looking at Apple. So that makes me want to go on my charts and look at Apple for him. Maybe I have an idea, a trade idea, either if it's a call or put. So don't be afraid to put your watch list here. We would love to see what you guys are looking at. Owl's profits, Owl's losses, self-explanatory. You guys post your losses, your profits. Don't be shy, even if it's $10. Owl's alerts. If you guys make an alert, if you guys place a trade, post it. Help others. If you feel confident in the trade, post it. We can always look at it as well. Josh has been posting and he's been doing really well. Introduce yourself. Doesn't really matter. I mean, you guys can post if you want. Who are you? What do you guys do for your free time? Again, no pressure on putting your information here. Coffee break. Anything other than the stock market, sports, whatever. These are not important. Breaking news. This is where we get automatic feeds from Twitter from the most reliable sources. Obviously these are one piece of news can affect the whole market. So if you want to look at the Walter Bloomberg, he will post some news. Let's say Tesla has recalled 30,000 vehicles. Obviously that will affect Tesla stock price. So you guys can feel free to check out this channel for any breaking news minute by minute. Market outlook. I post a market outlook every Sunday night, except these past 2 weeks I haven't been on as much. I've been very busy, but I do give a summary of what we're looking at, how the economy is doing. I talk about retail, how much margin people are using, anything, margin depth, and then I give out the key levels for the major indices. So SPX, Dow Jones, NASDAQ, Russell. I talk about the Fed. So this is a good summary of what may happen throughout the week. Market internals, I post the price upgrades, downgrades, all this information, and a PDF that you guys don't have to read it, but there's a lot of great information in these PDFs. When the market is very slow and you have nothing else to do, I would take the time to read this It's better than Yahoo Finance. It's better than all the other Twitter accounts. This gives an explanation of what's going on in the market. They talk about what's going on before the bell, top news. As you can see, Moderna plans COVID vaccine doses with new deal. Can you guys see this screen, by the way? The PDF? I hope I'm not just talking to
I
myself.
can see it.
You can see it? Okay,
Yeah.
great. Yeah, so it gives out a great amount of information. It will show corporate events. There's a lot of great stuff. Again, you don't have to read the whole thing. It's there for you. I post it every morning. So that's there for you. Earnings is the earnings that are coming out for the week. So, we will post this, I think, Saturday morning. Borax has been posting it every Saturday morning. Thank you, Borax. But these are the upcoming earnings for the week. Long-term investments. This is where Elkin and I or Shane will post the stocks that we buy for our long-term. Now, again, long-term doesn't mean 1 month, 2 month. This is literally for our retirement, where I am buying stocks, or we're buying stocks, and then I will leave it there until I am 59 and a half. But here's the thing. For legal issues, we are not saying you have to buy this stock or you have to sell this stock. These are stocks that we're personally putting in our portfolio. So you're not obligated to buy or sell the stock, right? Because let's say if the stock goes down and someone's not happy, they could easily sue us. So these are stocks that we're personally buying, but like last year I was mainly using fundamental analysis to find stocks that were great to have in my portfolio, but in today's market it seems like fundamental analysis is not that important anymore, right? As you can see with these meme stocks. But we do a lot of technical analysis on longer time frames to have a good entry on the stocks that we are purchasing. So feel free to use this as a guide, but these are stocks that we're personally adding to our long term. Al's tip of the day, if we think of something that pops up in our head, we will post it as a tip. I think this one was one of the most important, for people who are just starting their long term and who kind of get scared of seeing red in their portfolio their first time. Every day is different, right? So it could go up, it could go down. It's never always up, it's never always down, right? Historically, the market is always in a bull market. Okay. You will always get, if you invest in good companies, your average return is 8 to 10%. Okay. So don't have that short term mentality, right, for your long term investments. Okay. I highly even recommend to create a separate account for your long term and your short term, because when you see days like a bloody day and you see all your long term stocks red, it kind of makes you sad, right? And then it kind of puts you in a bad mood for your options trading. Okay, so have two separate accounts. That way you're not staring at your long term every second of the day, right? So yeah, this is a channel that we, if we have tips, we'll post it here. Side hustle, if you guys are doing, e-commerce or, anything other than stock trading, you have another business, feel free to post it here. It's a great networking section. Who knows? Maybe one of you guys can partner up with each other and create a whole new empire. But feel free to post it here. Again, voice chat, we are online from 6:30 a.m. Pacific time all the way till market close, 1 p.m. Pacific time. Voice chat is great if you can hop on. You don't even need to talk. You can literally just sit there. Sometimes we just ramble off on things, but there are times where we talk about finance, economy, whatever the case may be. So it's always here for you guys. Member support, if you need any help with your membership, how to set up an account. If you're having problems, closing an order, you just want to get a quick advice, to make it quick instead of, putting the premium chat where it could get lost. Hop on member support, and we can definitely get you the help that you need. Questions, if you have any specific questions that you may have, that it could get lost in the premium chat because a lot of messages go through, post it in the question section and we will do our best to get that question answered as quickly as possible. Basics, these are just the basics. If there's anything you guys want to post, you can. Please post it. These are just the basics of either stocks, options, finance, anything related. For the people who are more, tech savvy, chart savvy that use Thinkorswim, there's a lot of scripts that you can use here. All you got to do is click this link or copy it and then upload it to your Thinkorswim. Let me know if you guys have any questions. Shane can also help you guys get that set up too. But yeah, these are custom scanners that you guys can use and indicators. We already talked about this. If you want a cash account, here's a step-by-step process on how to sign up for a cash account. Stock AI, this will show the flow of certain stocks. So all you got to do is exclamation point flow. Actually, I don't know if this will work because, oh, there we go. So it will show the most recent flow of the stock. Okay, so you just exclamation point flow and this will pop up. Videos, any videos that you think is important. Again, you guys can post your videos as well, but it's got to be related to the stocks, finance, econ, whatever that can help the group with their trading. Class recap is obviously a recap of the class. This is actually our last free class because we've had problems with members who basically took advantage of us and left. So this will be our last free class, but we do have a good amount of videos from the previous classes. But this class, again, will be posted here if anyone missed the class. Books, same thing with videos. Any books that you guys read that's helped your trading or investing, whatever the case may be. Member support, same thing, but as the voice member support, but if you just want to, type it up. Upgrade to premium. So if you guys want to downgrade, it's totally fine, not a big deal. We do not personally go into your guys' account and downgrade for you. You guys have to do it on your own. We have way too many things to deal with. We get messages saying, hey, my subscription went through, but I need to downgrade. I want a refund. We can't do that. That's all under you guys. You get an email on how to downgrade, so that's all on you. Unless there's a certain situation, but you have to message Elkin and I to get approval. But we cannot, go in 5 days later and say and get that refund. So if you guys want to downgrade, it's all on you. And the free member chat is meaningless to you guys because you guys are premium members. You guys are here to make money. And with that being said, any questions before I send it to Elkin?
I got a question. Where do we find the videos?
So the videos, it's on our YouTube channel. I will send you that link, and then the videos will be there. I will repost it here.
Cool. Thanks, brother.
No worries. Elkin, you wanna? Oh, I don't think it's
Yeah, I
mic.
can go.
Oh, there we go. Okay,
No,
great.
I'm good.
Sounds good. And then you
Actually,
want...
One
Yeah.
question.
Go ahead.
sorry, I have a quick question.
Yeah.
How do we place the stop loss exactly? Because I don't know.
I'm going to go through that.
Oh, we're gonna go through that.
Yeah,
Okay.
yeah,
that's-
I'm gonna let you guys know.
Thank you.
Yeah.
Or to keep communicating with you guys, let's say whether it's we have a question or we have to want to talk about a trade, would we just go to just questions, or if we want to communicate with you, Keon, or you, Elkin?
That is a great question. I highly recommend you guys to put it in the question section. That way everyone can see it. It's hard for us to go into our direct messages every day and go back and forth, and I lose track of premium chat. So I might have missed a question or trade or whatever the case may be. All the questions, unless it's personal, unless you literally do not want people to see this question, right? You guys can please put it in the question section or in the premium chat, right? But if it's personal and you guys, you don't want it to be public, feel free to DM us. But if it's a question like, hey, are you still holding this? Don't DM us that because it's hard for us to go back and forth. That's a great question.
Sweet. Thanks, bro.
Yeah. All right, Elkin,
Cool.
you wanna? Let's get started, huh? You want to share your screen?
Yeah, I can go.
Okay.
All right, let me share my screen. Give me 1 second. All right, I'm sharing my screen now. I hope you guys can see it. I'll give you guys a second to hop in. You guys can see it?
Looks good.
One question, if I drag this, can you see these two? Can you see this option chain?
I don't see anything.
You can see the
I-
option.
I can see it. I can see it
Yeah.
too.
Small.
Can you see the stars too?
There we go.
Okay, so if I drag them,
I
I
got
don't
it
have to
now.
switch screens. Okay, perfect. All right, I'll give you guys a few more seconds to hop in. Okay, so what I'm going to talk, it's a little bit about option trading. Why do we do it, and what do I look? Like for me, it's not gambling. I treat it, as you can tell, this is what I do for a living. So even though sometimes we joke about the gambling stuff and the full risk, it's more serious than that. And it takes a lot of work to learn options. But if I have done this and Kian have done this, there's no reason for anybody to not do it. What a good way to see it, you can try it and see if this is for you. If it's not for you, you might lose a little bit, you might make a little bit, nothing big will happen. But if it's for you, it could change your life. It changes my life. I'm sure it changes Kian's life and a lot of people here. I would say at least 100 to 200 people have changed their life with option trading here. And with that say, we can start right now. Okay, let me get this here. So, okay, why do people trade options? Okay, the main reason why people trade options is because with options you can make higher returns using less capital, but you're risking more. One of the biggest complaints and one of the biggest reasons why people don't enter the stock market is because they say, well, I don't buy a $3,000 share on Amazon and make $500 in 1 year. I'd rather pass. So option traders, what they do is they enter with less money than long-term investors, and they can expect percentage higher returns in a shorter time frame, but they're willing to pay that risk. So with that say, the most important things that I look for options is volume, key levels, right contracts, and volatility. I'm gonna show you something here. This is how my chart looks. There's non-studies here, and you can ask anybody. This is how I trade. I don't add any. This is what I'm looking when I make the alert. I'm not looking at any fancy studies. I'm not saying they're bad. Again, some of them are good. I'm not saying don't use studies. I'm saying this is what I look when I do options. All these blue lines are levels that I draw. Some stocks have more than other ones. Like if you go beyond, probably have some more. Boeing. If you go on SPY before, since I was trading SPY a lot, look how many I have. So these are all important levels that I'm looking that are basically support and resistance. Support and resistance. Resistance is when the price push up and can go towards that level. And support is when the price goes down and can go below that level. That's what you call support and resistance. So those are things that I look. Now let's talk a little bit about how do we pick the right option. So there's something called the Greeks. This might sound a little confusing the first time. You can ask any questions after I'm done, and it might take more than once to get it. I didn't get it the first time. I myself, I'm a pretty slow learner, so I had to it took me a bit to learn this, but I try to put it as easy as I can so you can understand what the Greeks are. This is the most important thing you need to look at your contract. When you're picking a contract, this is gonna be these guys are gonna be your best friend. Okay, so let's say Let's start with delta. Delta is the amount your contract will gain for every dollar that the stock moves towards your way. So let's say here, this is what we call an option chain. This is how an option chain looks. So this D is for delta. Let's say, there you go, you see delta. Let's say Apple 125 call. Let's say you buy this at 82. You have a delta of 0.52. And Apple's stock price is at 125. So when Apple is at 125.06, you're gonna pay for a 125 call $82, approximately $82. If Apple goes to 126.06, move $1 towards your way, your contract is gonna gain 0.52, which in other words is $52. So that's basically it. And for puts, it's the same. You're gonna say, well, they have a negative delta. It doesn't matter. Like it's because puts you want the price to go down. That's why it's negative. But again, the delta, it's going to be the amount of money your contract is going to gain for every price the stock moves towards your way, not the option, the stock. So again, if Apple is at 125.06 and you have a 0.52 delta on a call, that means if Apple gets to 126.06, you're gonna make $52 on that $1 move. That's delta. Now let's do gamma. So gamma, it's pretty simple. Gamma adds to the delta after every dollar move towards your way. So let's say, for example, here, you have a delta of 52 and a gamma of 0.21. Let's say Apple moved to 126.06. So we already moved $1, we're getting this delta. Your new delta is going to be 52 plus 21, which will be 73. So if Apple move another dollar from that 126.06, you're gonna make, instead of $52, now you're gonna make $73 because that gamma added to your delta. And like that, it keeps going. Gamma always adds to the delta, and every dollar that stock moves towards your way, you're gonna have a new delta that comes from the original delta plus the gamma that was added. All right, now theta. Theta is also very important, especially for you guys that like to swing. Theta is going to be the amount your contract value will decay for every day that you're holding. So with this say, there's three things that could happen with a stock. It can go up, it can go down, or it can stay in the same price range. So when you're swinging something, especially you have a very short expiration, you don't have time, you need one out of the three things to happen for you to make money. That means that you have about 33% chances to make money. That's why having the right contract and understanding what you're doing is so important. Every single trade, you have 33% chances to make money. It sounds bad, but it's not that bad, especially if you look at our report when we have at least 90% winning rate. And this is because we pay attention to the stuff. We just don't do it randomly. So if you're planning on swinging something, you have to look at the theta because, let's say, Apple here, this same contract that we're looking, the 125 call, let's say you pay 82 and you have a theta of $14. So theta, as you see, theta negative 14. So that's going to decrease the value. So if you pay 82, and let's say Apple stays at 125.06, and then tomorrow, for any reason, Apple didn't move at all, and you are at the same price that you paid today, well, instead of 82, your contract is now going to be worth 68. So that's why. If Apple goes down, you're going to lose money. If Apple stays the same, you're going to lose money. If Apple moves up and you have the right price, you will probably make money. The right price, not the right contract. If you guys ever want to do your own trades, please review the contracts with any of us before you get in. Okay, and last, Vega. Vega is the amount your contract gains or loses for every 1% change on implied volatility. Implied volatility comes from it reflects on the option chain, but it comes from the stock moving. If the stocks move in long streams, the implied volatility is going to be higher. If the stock moves very slow and it's consolidating, there's going to be less volatility. As you know, volatility represents movement. So you have something here in your option chain. Give me 1 second. So where it says implied volatility, you see 17%. So if you have a 17% implied volatility, you are going to see something that you call Vega, and that's going to tell you, let's say you have a Vega of 0.1 and implied volatility goes to 18%, your contract value is going to make 0.1, so it'll be making 0.10. So from 82, if implied volatility move 1%, your new contract is going to be 92. But if implied volatility moves to 16%, that same 0.1 is going to subtract your contract. So if from 17.10, the implied volatility goes down 1% to 16.10, instead of 82, your contract is going to be 72. So that's why when people are asking, hey, so this thing is going my way, but I'm losing money. It's like, well, is it losing volatility? Because if it's losing volatility, for every percentage, it's gonna decay your price because that's what Vega does. And that's why having contracts with very high volatility is always very high risk. What's high volatility? For me, everything above 80%. Doesn't mean you can trade it. I sometimes do, but you have to be aware of this stuff. All right, so those are the Greeks. If you have any questions, I understand because it's something that most of the people get at the first time, and you can ask me when I'm done with this. Okay.
I have a quick question. How do you add these implied volatility in the TOS?
Yes, let me say this for you.
So, dollars each, I can take 3 claims for this, and
Okay, so for implied volatility, you have to go to trade. And I think you do it on this wheel. So you see where it says layout? You do
Yes.
customize, and you can add everything here.
Okay, got it.
Yeah. So
Thank you.
layout, and you just add it. Everything, you can add it here. I do have Vega here, but I don't have any of the other ones. So this is Vega here. So as you see,
Yeah.
for every 1% in implied volatility, this contract is gonna either gain 0.5 or lose 0.5 if the implied volatility goes lower.
Got it. Thank you.
Okay. So types of contracts. So there are three types of contracts that you can get. In the money contracts, which if Apple is at 125, every strike price for calls below 125 will be considered in the money. And every contract for puts above 125 will be considered also in the money. Because remember, puts you want the price to go down. So a lot of people get confused and ask, if Apple is at 125 and I want it to go up, why would I buy a 115 call if it already passed 115? Okay, we're gonna get there, but you can do it. It's not a bad thing to do. It's actually the best thing to do. And okay, so that's in the money. In the money contracts, they are usually more expensive, but they have a higher delta. That means that you're gonna make more money. I can't hear anything. Can you guys hear me? Okay, audio is fine. Okay, so in the money contracts are more expensive, but they have a higher delta. What does that mean? That you're gonna make more for every dollar you move your way. They have a lower theta percentage wise, and I put the percentage because sometimes when you look at the numbers in the money contracts are expensive, you might have a higher delta in price than now the money contract, but percentage wise you're gonna lose less. And they allow you to exercise. What does that mean? When it comes to expiration, if you have a contract in the money, let's say you have an Apple 120 call. So if you have an Apple 120 call, that means that Apple is in the money since Apple price is 125. You're gonna have the right at expirations to buy 100 shares of Apple at 120 because that's your contract. So that's gonna be up to you. If you ever decide to do this, you gotta make sure you have the funds. So at the money will be at 125 the strike for both puts and calls. Since Apple is already at 125, that'll be at the money because it's at the same price. They are less expensive than the in the money contracts. They do have a lower delta. They have a higher theta and percentage, right? And they do not let exercise. They do not let exercise. So make sure you understand this. If you hold a contract it's at the money and you let it expire, you're gonna lose 100%, no matter how much that contract was worth. So just be careful. Always review every Friday what contracts do I have open that expired today, because you don't want to get exercise in a contract if you don't have the funds, and you don't want to lose the whole value of a contract if you are making something and it's gonna expire worthless.
Real quick, while you're on that topic of allow you to exercise, so an allow you to exercise contract would mean that if the contract's expiring that day, we would not lose all of our money on the day it expires. But if it does not exercise, that means we lose all our money on the day it expires.
Yes.
Gotcha.
Exactly.
Got it.
So out the money contract. Out the money contracts will be for calls. If Apple is at 125, everything above 125 will be an out the money contracts. They're usually cheaper, but the further they go out the money, as it says here, is cheaper, but they have a very low delta. And you know why? Because remember, the delta and the gamma, they add to the contract value. So if there's a low delta and there's a low gamma, there's nothing adding to the contract value, and that's why they are so cheap. They have a very high percentage on theta, especially same week expirations. Sorry, I was reading this message. Okay, if somebody can just take care of this guy. I don't know why he can hear. Everybody else can hear though. So he's the problem, not us. Okay. So as we talk, the further out the money, the cheaper, because we thought there's no delta and gamma adding to that. The further out the money, a lower delta. We talk about that. The further out the money, a higher theta percentage. Why? This is especially with same week expiration. They do not exercise and they also expire worthless. So what I recommend you guys, if you ever want to buy out the money because it's cheap, at least look at the delta. at least look at the delta and the theta. I would only get out the money contracts if I'm planning on holding for a longer time. Unless it's just one strike out the money. Let's say you want to get a 126 Apple call. Okay, that's not too bad. But me personally, I always try to get either in the money or as close as in the money as I can, because of all these facts that I just explained you. Again, yeah, they're a little more expensive. That's why I look at different stocks and I try to find the most affordable contracts, but it's worth to pay. I rather pay one contract of Apple at 123 for $234 than 10 contracts of 126 at $39. Because if it's gonna go my way, I'm gonna make more. And if it doesn't go my way, I still have more chances. Because if you're out the money and if it doesn't go your way, if let's say you buy Apple calls, 128 call, and Apple goes down to like 123, 122, the chances for you to recover from that contract are very unlikely because you were already out the money and you're even further out the money. So in the money contracts always have better chances to recover if it doesn't go your way. All right, these are just time frames that I look. I mainly scalp, but I also I do swings too. And for my scalps, what I look ideally 1 day 1 minute and 5 days and 5 minutes. That's a back to back. I don't have any preference on either one. I'm looking at the two at the same time. Sometimes I do 5 days and 15 minutes. I also use that one for day trades. 10 days and 30 minutes is also good for day trades. 20 days and 1 hour, you can use it for day trades or very short swings, meaning 2 weeks out. If I want to swing, I'm looking at 180 days and 4 hours or at the daily chart, which is a 1 year and 1 day. And you can easily change those here. You have all these time frames here. So if you want to add more, you do customize list and you can add time frames here. So it's gonna ask you daily or intraday. So daily is gonna be longer time frames, and intraday is gonna be shorter time frames. And you just click add or apply and OK. So and you have them all here, and they would pop here. And you can do this with other apps like Robinhood. I do not have Robinhood. I do not know how to use Robinhood, but I know it's pretty user friendly, even though a lot of people complain that they have very bad feels and they just have bad reviews. So I would not be able to help you guys with Robinhood, but there's plenty of videos and it is not that hard. We also have a lot of members that use Robinhood, and I suggest you to get out of Robinhood as soon as you can if you want to take this for serious.
I got a quick question.
Yes.
What the heck is a scalp and what's a swing?
Okay, I was just about to explain that. So scalps, they are positions that you are in a very short time frame. So you usually scalp anytime between in our case, because we make alerts and you have to wait for people to get them. We wait between 5 to 10 minutes to be in and out of a position. So for scalps, ideally you want to buy the closer expiration that you can, because you want to get that momentum, and the closer expiration is going to be a higher delta. So once you get that momentum, you're going to make your gains here. Like, I don't know, I think beyond, it was here last week, like we made like 100% in 5 minutes because we had the right contract and we were scalping it. So that's a scalp. A scalp is a contract that you hold for a little amount of time, not even 1 day, 1 hour, like literally 5 to 10 minutes max. Sometimes you can hold longer if you wish, but ideally that's the amount of time that you want to hold a scalp. Short swings. Short swings, I usually do 2 weeks to a month. If you don't want to risk much, never swing the same week expiration. Even though you can, and we have done it before, and we have made money, the reason is because we had a right contract. We have a very low theta, and we were in the money. That's it. And it was like on a Monday. If the contract expires on Friday, maybe swing it for 1 day, but you're risking a lot. So if you're planning on swinging something, buy yourself at least 2 weeks, and that's very, very short time. Always try to, if you plan on holding, buy as much time as you can. But again, if you for any reason don't want to hold it too long, and you say I want to hold this contract overnight, if you don't want to risk much of it, at least buy yourself 2 weeks. So a short swing here, 2 weeks to a month. And for that one, I use the 20 days, 1 hour. An average swing for me, I buy 1 to 3 months, and I use this one, the 180 days and the 4 hours. And a long swing is 3 months or more. Sometimes I even buy a year. So that's basically the difference. A swing is within minutes. A day trade, you sell it within the same day. No, sorry, my bad. A scalp is within minutes. You open and close a position within minutes. A day trade, you open and close a position with the same day. And a swing, you open and close a position in a matter of days. So everything you hold overnight is considered a swing. So these are orders and spreads. So
Okay,
what's a limit?
A quick question. A day trade, you guys specify that this is a day trade?
No. You will see it on the expiration. We're not gonna, because sometimes the plan will change. Usually if we have the same week expiration, I usually do label the day trades though. I put either a day trade or a swing. If I see something that is moving slow, I put either day trade or swing. If I put a far expiration, it's gonna be a swing. If I put at least 2, 3, 1 month out, that's going to be a swing. It's implied. If I put the same week expiration, if for example, if you see this week today, if you see something that says for June 4th expiration, for June 4th expiration, and we're opening today, that's going to be a scalp because it's the same week expiration. As I explained here, same week expirations are usually scalp. So you can go by this. So if you have a 2 weeks to a month, you can expect that to be a swing. If you have a same week expiration, unless it's labeled different, I would label as a same week contract. I would put day trade or high risk swing if I'm planning on holding this longer. But if I don't put anything, if I just put the same week expiration or Key and Dosit or Kindred or whoever, it's implied that it's going to be a scalp. So just be ready to be in and out. If you have more time, it's also implied that it's going to be a swing because there's no point on buying a contract for 3 months, 5 months if you're going to sell the same day, unless something very unusual happens. Okay, let's go through orders. So we have a limit order, which basically says buy or sell me at this price and not any other price. So limit orders are tricky because sometimes you're going to place the order and it won't fill because the limit changed. So you always have to make sure you look at the spread here between the bid and the ask, and you're on limit, and you sell it, and you have the right limit set. So it usually fills in the middle. If you're trying to buy, you can always push it more towards the ask, and you most likely will get a fill. If you're trying to sell, you can most likely push it towards the bid, and you will probably get a fill. If you're trying to buy, and you're trying to pay less, so you try to push it towards the bid, most likely you won't get a fill. So always do it in between. Something very important you need to do, if you don't get a fill and you're trying to send another contract with a different limit because this one didn't fill, make sure you don't have any pending orders. Because if you leave it open if you leave your order open and if for any reason that price goes back there, you're gonna get the order filled. So always, and you will get here. So it won't show right now, but here to the left, you will see a thing that says a little green thing, meaning that you have an order pending. So you can easily right click that and cancel it. But always make sure on your font too, on the bottom, you're gonna see orders and you can see pending. Always make sure you don't have pending orders because they will they will still be valid and you don't want that to happen to you. So a market order is just gonna buy or sell me at any price. So you're just gonna buy and sell at whatever price the market's paying you. This is okay to do with very liquid contracts. What I mean with liquid is, for example, here, Apple. The spread from between the bid and the ask is only 0.37 to 0.39. So that's a liquid contract. There are other contracts like AMC that have a way bigger spread. So you see here 10.2 and 11.25. So in these ones, you don't want to do a market order. You want to always do a limit. But for contracts that are liquid, such as Apple, you could afford to do a market. The advantage is that you're gonna get a fill right away, and you won't have to wait. But you gotta make sure it's a liquid contract, because if you do it with another stock, such as AMC, GameStop, that is like very volatile, you could lose a lot of money by doing market, whether you're buying or selling. So a stop default, it will trigger a market order below the price given. So for a stop, what you need to do, and it's the same concept on your font, you go here and you go order, you do sell. So you gotta change it here to sell. Make sure it's sell, and you do a stop. And you see how it says market here? That's because that's what it's gonna say. So let's say you pay 37 for this contract and you wanna stop at 30. So it's gonna stop you at 0.3, below 0.3. If there's no fill for that contract, it's gonna fill you at any price below, but it's always gonna try to go as close as it can for the stop. So let's say you're gonna be like, well, why do I have a stop at 0.3 and my fill is at 0.28? It's gonna be like, well, because the price probably dropped very fast below that price, and that was the better fill you could get. So it's still better than losing more than that. A stop limit, it will place a limit order at a certain price and not anything below. So if you do here stop, you see a stop limit, it'll be at 0.37. So you do here at 0.30. So that's gonna fill you at 0.30. But what happens if the price drops fast and nobody can sell you at 0.30? You're gonna still be holding that contract, and you're gonna be hoping for that thing to come back. So the advantage is that you won't get a fill below your stop, but it's no guarantee that you will get fill. And again, the bid and the ask. The bid is this here. That's the price buyers want to buy, and the ask is this one here. Is the price sellers want to sell. So the difference between the bid and the ask is called a spread. And usually high volatility contracts or high volatility stocks, they have very big spreads because it takes time for the option chain to catch up with the stock price. And very less volatile contracts have very low spreads because the option chain has more time to catch up with the stock action. And last, this is something very personal that I did for you guys. You don't have to follow it. Again, this is something that I see from my experience. I think this is the way to do it, but again, everybody's different. You can use this as a reference, but again, see if it works for you. It's just something that I wanted to share with you guys. So as you see, an account with 50 to 500 bucks should never have 30% or more in a position. As you know, trading options is a high risk deal, and it'd be a shame for you to put all your money in a bad trade, and for any reason that trade goes bad, you're gonna burn your whole account. So this is something that I did for you guys. Like to see at 25,000 or more, I would do 2%. If you feel a little risky, you can do up to 5%, but ideally stick with 2. Again, look if this works for you. If you think it would work for you, you can use it as a reference. There's also, if you go to my alerts channel, there's a pin with this. And again, this is something personal too. This is where I like to have my stop loss when I'm not when I have the right side of a position and I'm not willing to take too much risk. This is where I usually do it. Same week, anywhere between 15, 25%, sometimes even 30% if it's a smaller position. 2 weeks, anywhere between 25% and 40%. 2 weeks and 1 month, 40% to 50%. 2 months per month, 60%. This is for me, and you're gonna ask, well, why are you risking so much on long swings? First, because I never expose myself too much. You're never gonna look at my account and you're not gonna see, well, this guy is swinging half of his account in all these positions. I usually, because I've been trading long enough and I don't have a lot of trust in the market, I usually have about 1, 2, maybe 3 swings open. So every time I go into a swing, I'm going into a full risk because I know that the market can play me. That's why I have a bigger stop loss here. Also because you get more time to recover. Like if, let's say you have an Apple 125 call, in Apple for this week expiration, Apple is to 122 tomorrow. Well, that contract is most likely gone. You're gonna most likely take a loss. If Apple dips to 122 tomorrow and you have a 125 call for 2 months out, that contract is not gonna lose as much value, and there's bigger chances for you to recover because you have 2 months for Apple to move for you. So that's what I do it. Again, the reason why I set bigger stop losses on longer expirations is because I don't go as heavy. I don't like to expose myself too much, and because I got time on my side. For same week, I don't like to keep it too much. I like to have a shorter stop loss, but again, the main reason is because I do pretty much day trading, and this is how I feel comfortable with. I do like to give some room sometimes because I feel that having a stop loss too tight, it won't work for me because I also allow myself thinking about, well, sometimes you gotta leave them, you gotta let them breathe, if you wanna call it that way. I'd rather buy 2 contracts and have a 25% stop loss than buying 10 contracts and have a 5% stop loss. A lot of people, they go heavy on contracts and they set such a tight stop loss, but since they have so many contracts, they take a big loss because they expose themselves too much. So I'd rather buy less contracts but have a bigger stop loss. Again, I think this is mostly personal and this is what I do. So I just wanted to put it out there for you and show you how a little bit of my risk management. And that's it for me. If you guys have any questions, we can go. You can ask any questions here.
So you never have more than 3 swing trades open at once.
It's not like a rule of thumb, but I usually don't have many. If like back in October when the market was in a solid uptrend, I did expose myself a little more. But right now, I don't know. It's just something personal. I don't want to have, because if something happens, like something bad happens, you can take big hits. So it's mostly like not about the 2 or 3 number of trades. It's about how much of my account is on swing. If I'm stringing calls on 10 different stocks, if for any reason something bad happens to the market, I'm most likely going to take a big hit. So I just don't want to take that exposure when I can make money scalping all day, every day. But again, that's different. I've been scalping for a long time now, so I have a plan and I am pretty fast at it.
Gotcha. And can you explain a vertical trade to me?
Kian would probably do those better. He does it better than me. Vertical, basically, I mean, it's you buy a call and you sell a call, right?
Yeah.
And
So
you
if
take
if you're bullish, you buy it's a vertical call. I mean, but then again, before anything, you need margin, right? You
Yeah.
need margin to play verticals. If you don't have margin, you're not allowed to play it. And margin is basically you're using leverage, so you're borrowing money.
You're borrowing money to sell the call.
Exactly. But let's say you do have margin, and I don't want to confuse a lot of people. So, the beginners don't even worry about verticals until you're comfortable with buying calls and selling your contracts, buying puts and selling your contracts. But a vertical is if you're bullish, it's a call. You're buying a call and you're selling a call. Not selling your contract, you're literally selling the premium to someone. And you take the difference of those two premiums. So if I'm buying an Apple vertical call, right? So I will buy a 130 call, for example, okay, a 125 call, for example, and I'm selling the 130 call. The premium of the 125 strike of the call, I subtract that with the premium of the 130 call, and the total debit is that amount, right? So let's say Apple 125 call is $2 and the 130 call is $1. I'm going to be paying $1 for that vertical, or $100, I should say. And it's just cost effective. Your profits are capped to 100%. Your risk is how much you pay for the contract. But again, if you don't have margin, you're not allowed to place these orders because you need leverage to cover when you're selling the premium.
Gotcha.
Mhm.
Just wanted to know.
Yep. Good question.
You
No worries.
will pay less.
Yep.
That you can do that with like very expensive tickers, and you're risking less too.
Yep. When you get to that level, when you want to start doing margin, I know a lot of more people have opened up margin accounts. I'm always happy to help. I don't want people to just open up margin and not know what the hell they're doing because it could get very, very expensive. But for anyone who is interested in margin, let me know and I can always help you guys. I'm a huge fan of it. It's, I mean, it's the best way to play big premium stocks, Nvidia, Tesla, Amazon, whatever. But then again, it works the same. It's not that, I mean, even though our margin place has been almost 100% in the past couple weeks, it's the same strategy as if Elkin was doing scalping. I'm not doing anything different. It's not magic. Margin is not an automatic winner. It's the same strategy as Elkin or I swinging naked calls and puts. And with that being said, if I do play a margin play, so if I'm in an Apple call vertical, which I probably will never be in, but for example, feel free to play a naked call. So if I'm playing an Apple 125, 130 vertical, you can play the Apple 125 naked call or 126 call. Just know that it might cost a little more than the vertical, right? So you can always do that, as well. But sometimes it doesn't work, for like if you want to play Nvidia, the Nvidia play that we made yesterday, that premium cost over $3,000. But the vertical I played cost me, I think, $2 or $3. So that's the benefits of verticals. But again, if you guys want to, set up an account, please don't be afraid to ask me questions about it. I'll be happy to help.
Okay. I feel like I got to get more comfortable with this first.
Yep.
Until I jump into that.
Yep. That's very smart.
But yeah, definitely.
I know a lot of people have questions here. Come on. Come on. I don't want to see a message at 10 p.m. asking what is it called. It's a safe place.
Hey, Elkin, when you were showing the trade charts, you
Yes.
changed the call or you changed down to the bottom to a sell. Is there a reason for that?
I was just showing you how to
do
stop,
stop
because
loss,
when you do stop, you want it to be at sell.
you want to be at a sell. Okay.
For stops, yeah, because you already bought the positions. To get out, you want to get out when you sell.
Got it. Okay.
Mhm.
Now, key levels, for instance, those are stocks that you guys are putting out when you don't have time to put out the full call or the full put.
Well,
let's-
not necessarily. It's what we're looking. It's basically what we're looking. Sometimes they're gonna like move fast and change, but as Kian said, we were looking at very like 10 stocks at a time. So sometimes we're gonna lose or like miss some of those. But it's not that we put them there and we don't look at it. It's like we are looking at it. A lot of the times you're gonna see that I alert something and it's based on that key level.
Gotcha.
And
You guys don't always enter those trades?
I would if I could, but sometimes as Kian says, we're people, and if you're looking at 5 stocks at the same time, it's like sometimes you just miss it. And Thinkorswim, unfortunately, doesn't have the best alert system. They're pretty laggy, so until they don't fix that, it's been over like a year, I think, in which the alerts are lagging. So, and it doesn't matter because it hit that price doesn't mean that you're gonna go in right away. You should still look at the candlesticks. Like what we mean on the key levels is watch for a candlestick closing either above or below that price. That's what you want to see. But that's mostly for a lot of people that already know how to trade. They use them more than you guys. You guys can still look at them and look for action, but I'm personally also not trading more than 2 or 3 trades in a day, as you can see. This is because of risk management. As I say, you have 33% chances of making money in one trade. Because if the stock doesn't go your way, you're gonna lose money. If the stock does not go anyway, you're gonna lose money. So every time you trade, you don't have to make 5, 6, 7 trades in one day. If you look at the real traders, they make 2 to 3 maximum in one day.
Thank you.
Yeah. All right, I can probably finish my stream. All right.
Any
You
other
guys can ask
questions?
questions if you want.
Keon, you were going to go over Robinhood a little bit?
Yes, yeah, I can do that. I can definitely do that. Okay, let me share my screen. Let me open my Robinhood account for the first time in, I think, a year. We'll see. Application, or actually, this one. Can you see my screen?
Yeah.
Okay. And then let me change on the, what's it called? Oh, why is it not doing this? Give me 1 second. There we go. So this is the, oh, I do have money in my Robinhood. Interesting. Anyway, Robinhood website, right? So this is on the desktop. So if you want to place options on Robinhood, you can.
I can't see your screen.
You can't? No?
No, not right now.
Oh wait. Oh yeah, you're right. You're right. You're right. How about now? All right.
Yep.
Perfect. Perfecto. You can still see it, right?
Yeah.
Okay. So you want to place an option, right? So you can either search the stock, or you can go on your favorite list or whatever the case may be. So let's say I want to go into TSM. You're gonna click TSM, and obviously you want to make sure that you applied for options on Robinhood, right? And you're accepted, right? You have an options trading account on Robinhood, correct?
Yes, I do.
Okay, perfect. So
I've,
you're
done
on
it,
the
I've used it before.
Cool. So you're on the stock. You want to click Trade TSM Options, right? And let's say I want to get a TSM 120 call for July 16th. Okay, so we're going to go to July 16th, right? And we want to make sure that we're buying a call. So we're buying a call. And we're buying a 120, okay? So we're going to click the 120. It's going to show you the Greeks, as I can discuss. So this is a pretty good delta. Theta is good, right? And we're going to buy it. Okay, it's actually kind of cool. But I don't think this is not correct though. I don't even think this is correct. Anyway, it's going to show you're in a call, a 120 call, 716 expiration. Click continue. You click how many contracts you want to buy. Review order. I don't have enough buying power, obviously, but review order. Let's say your order is in. It's going to show right here, your orders. It's going to show options probably. I can't, man, I don't have any options open, but I'm sure it's the same thing. You would just go in and then click close order. I haven't used Robinhood in over, like, I can't even tell you the last time I ever used Robinhood, but as far as buying the contract, you can search the stock, trade, Tesla options, make sure it's a buy. You're buying a call or you're buying a put, right? So if you're bearish, you can buy a put. And remember, when you sell a contract, when you want to sell your position, you don't go here and say, I want to sell a call or sell a put. That means that you're selling this premium, okay? And not selling your contract. So for example, what do I mean by selling premium? The overall goal for selling premium is to buy this back for as cheap as possible. So I will profit. If I'm selling this 602.5 call, I want to buy this back for as cheap as possible. I will lose money if this goes higher and higher and higher because I have to buy it back for more. Okay, so make sure you don't go here and say sell the call, right? For opening a contract, you want to buy a call or buy a put. You buy your contract. And I'm sure it shows on your portfolio, your stocks or options. You probably click it and it probably says close order. You go in there and you'll close the order. Does that make sense?
Totally.
Yeah.
My biggest question is setting up the stop loss
Ooh.
on Robinhood.
That is a good question. Okay, let me see if I can quickly access my app and I can maybe show you from I can talk you through the app way. As I said, I haven't used Robinhood in a long time, so I'm gonna freeball it.
Okay.
Unless someone knows how. I think you go to, oh God.
Jesse Khalil's in here and he's been quiet the whole time. He knows.
Yeah, I mean, honestly, I don't even know how to sell my stock if I wanted to sell it. Trade, sell. Okay. Oh, okay. Here we go. So you would click your position. You would click trade on the app, and then you would click sell. And then on the top right, and this is on the app. This is on the app. On the top right, it says dollars. And then it says market order or conditional orders. And then you want to do a stop limit or stop order. And then you just do however much you're willing to lose on that premium. You just type in that premium and then it will place it.
Gotcha.
You got it?
Yep, I see it now.
Sweet. Okay, perfect. Oh, thank you, Arlie.
Yeah, that was my biggest question.
Mm-hmm.
And as time goes by, I just got to get my TD Ameritrade fully set up.
Mm-hmm.
I just having issues getting funds into my account. Like when I go into my TD Ameritrade, they're asking me how do I fund my account, and it says check, account transfer from another brokerage, or wire. It doesn't give me an access to do ACH.
Wire is not bad though, if I'm not mistaken. I do a wire transfer. They might do a little fee though, I'm not sure. But
Okay, but yeah, I think there's a fee. It's weird that
Okay.
you can do ACA. So
yeah,
I
I'll
honestly
Yes.
just contact them because TD Amerity, they're pretty good with support.
mhm.
Yeah, I don't know.
So
Yeah,
if you
just
want
contact them.
if you
Honestly,
want to quickly
they
talk with support when markets open, you go on the TOS app and then you click more on the bottom right, and then you're gonna click help and support on the bottom left,
I see it.
and then you
800
click
454 9272.
yeah, but you can do chat. The chat is way better. You don't want to be on the phone
it's
with these
good.
guys.
They get back to you right
Yep.
away.
And then you click support chat, click new, and do trade desk. They're much faster than general support because
Yeah.
trade
Okay, wait.
they
Let's
think
write
that
down. Say
yeah
that one more time.
yeah. Okay, so you're gonna go on the TOS app, right, on your phone.
Uh-huh.
You see where it says more on the bottom right?
Got it.
Yep, click more. Then on the bottom left, help and support.
Uh-huh.
You see it?
Uh-huh.
Okay, and then you're gonna click support chat. And then either it says general or trade desk or new on the top right. And then you're gonna click trade desk. Obviously, it's not gonna work right now because market's closed.
Gotcha.
And then you type in your question, whatever concern you have with TOS.
Perfect. And you think it's better to not call? It's better to just
Trust me, yeah, don't call. I've tried calling. These guys they're terrible. The chat is much better.
cool. All right, sounds good. That helps a lot.
Yep.
Okay.
Do you mind showing TD Ameritrade how to do the stop loss?
Yes. Yeah. Do you want me to do on the mobile or walk you through on the mobile or show you on the desktop?
I'm using mobile, so
Okay.
if you can.
So yeah, I can walk you through. Okay. And you have options enabled, right? I think I know you
Yeah.
do. Okay, great. So let's say, are you in any open positions?
No.
Okay, so let's do this. On where it says watch list, right? You're on the first tab, right?
Yeah.
Let's just do an example, Apple. Okay. So type in Apple, and then you see the options tab. Can you see all the options?
Yeah. Yeah.
Okay, great. So let's just make an example, June 4th expiration. Okay. And let's say we're in a 125 call. Okay. Let's just pretend that we're in.
Okay.
So you see the contract, right? It says sell limit quantity -1. Do you see that?
Oh, okay. So I have to click 82 cents.
Yeah.
On
So
S?
yeah, exactly. Click that.
Okay.
So and then that option will show up, right? But this is like I'm pretending that you already have Apple. You have this contract, right? So
Okay.
I'm just pretending. So now where it says sell, you want to click the arrow to where it says stop on the right hand side of where it says sell, the sell tab.
Okay, wait. I think I'm confused. So I'm at where it says overview chart in level 2.
Overview.
Top? No. Okay. So.
Oh wait,
So
here
where?
I can do this. I can actually do this. Here, I'm gonna screenshot step by step actually. That way. So it's gonna look like
Are
this.
you in your phone?
Yeah, she's on her phone.
So for stop loss, you can only do it after you purchase it.
Exactly.
Oh, okay.
Mhm,
Okay, I think that's where I was confused.
Yep. So, let's say you're on this page. I just screenshotted it and put in the premium. So
okay.
you click Apple. Okay, and again, we're pretending that we already have a position. And let's say it's the 125. So I'm going to go to the 125, call. Okay, and then this is what you see. Once you click that.
Kian, we cannot see your screen.
I'm not sharing my screen. I'm just because I can't share my
Oh.
mobile. Oh wait, maybe I can actually. Oh wait, no, I won't be able to because I'm recording it. Anyway, and then when you want to set a stop, so let's say you're willing to lose 30 bucks. You're gonna change the arrow to a stop, and then you're gonna change the premium to whatever 79 minus 30 is, so 49. So it's gonna look like this.
Oh, I see. Okay.
Mm-hmm. Oh,
Gotcha.
yep. Okay. There you go. And then you're gonna place that order.
Okay.
And then you click review, and then that's it.
So that doesn't sell it or anything. It just
Nope. It will sell if it hits that premium.
Okay. Makes sense. Okay, thank you.
Yeah, no worries. Great question.
Yeah, my
Kian,
last question for you today. Oh, go ahead, Monica.
oh, can you please show also on the PC, because
Yes.
I don't use the mobile.
Yep, I can show you.
Okay.
Let me get my stream open and then
I have it ready. I can do it real quick if you want.
you want to?
I mean,
No, I can't see your screen.
No, yeah, I gotta share it real
well,
quick.
they're already on your screen, so yeah, just you
Okay.
can do it.
Yeah,
That
I
way you
got
don't
it.
have to switch.
Yeah, and I just gotta make sure it's on my. Okay. Here's that, and then Discord. I got to change window.
Okay.
You can
It's
see
better.
it. Okay,
Yeah, now I can
so
see.
do I have anything on this one? Okay, so for example, where's my TSM? So let's say we're in this position, right?
Mm-hmm.
So this is a vertical. Okay, wait, let me do something real quick. Let's just go on paper trade. So paper trade, let's just say, give me one second. Let me let this load up and then I can show you like a real. Okay, so right now I'm gonna enter. So this is paper trade. So we're pretending that it's March 2nd. Let's say I get into a 127 TSM call. Okay, I'm just gonna buy it, whatever, blah blah blah. Okay, so I'm in this position, right?
Mhm.
Now if I want to set a stop, I'm gonna right click this position, create closing order, sell. So make sure it's on sell, change the order to a stop, and however much I'm willing to risk. So let's say I'm willing to risk $185. So the premium I'm going to change to 3, confirm and send, and there's my stop. Okay? That's all you got to do.
So this is just the stop limit, or is this a stop loss?
This is just a stop, just a plain
That's
stop.
a stop loss. Yeah.
Okay.
Mhm.
We can do both together, right? No.
Nope.
No. Okay.
Mhm.
Okay.
But yeah, and then if let's say you don't want to do a stop, you just right click, cancel order, or if you don't want to risk that amounts, you can just replace order and then change it to, whatever you want. And then you just resend it.
Okay. Got it.
Mhm.
Okay. Okay. Thank you.
Yeah,
No worries.
last question for you,
Sure.
and then I'm out of here.
Yeah.
So for let's just say we're in live market trading. So there's some people in the voice chat
Mhm.
that say, typically, are you or Elkin in the voice chat, or how often are you guys typically in the voice chat?
We're both in there.
As long as the market's open, we will be there.
Yep.
Unless
We're
something,
always
unless
there.
we have an emergency.
Mhm.
So if I had a question, like I'm gonna place it, let's say I'm gonna place a contract on one of your guys' live alerts, and I'm just having questions going through it. Would you guys like, let's say one of us in here had a question, would one of you guys walk us through that if we had questions going through it?
Yep. As long as it's not like
As
a
long as the
very
contract is still
volatile.
valid.
Yeah. If it's valid and if it's not something that has moved very fast or it's something that we're trying to, execute quickly, we would love to help you fill that order. Like 99%
So
of the time.
basically, if you see an alert within the first 30 minutes that have the same week expiration, that one will most likely be a no. Because not because we don't want to, it's because by the time we're re explaining you and you're about to get in, we most likely want to sell already. So that would be
Gotcha.
bad for you. But if
Mhm.
it's like, you see the market's been open for about 2 hours and there's a contract that have 2 months in, and it's like, okay, well, they're not gonna sell this contract right now or even today. So yes, that one we will walk you through.
Yep.
Or if something is happening to you, let's say you have an open position, and for any reason you don't know how to sell, or there's something you're having any problems getting rid of it, yeah, hop in the voice and we'll be there for you.
Yep.
Oh, awesome. That's all I needed to know.
Yeah,
All right. Thank you, guys.
No
no
worries.
worries.
Oh, can I ask one quick question, Kian?
Yes, yes.
Okay, when you guys do the alerts, and then it says like 77 call at 2.5
Uh-huh.
premium. So when we start putting the order, I know the limit order sometimes it hits, sometimes it doesn't. Do you
Yes.
recommend that time to put the limit order or the market order?
So it depends on the width of the spread, right? So you don't want to play, let's say the spread of, for example, if we're looking at this contract right here, right?
Mm-hmm.
Let's say I
Mhm.
alerted at 485. I don't want you to
Mhm.
pay market because then you're going to be paying what, 15? That's almost 60. That's $60 more than what I got it at. Now,
Okay.
what if so let's say let's do this. Let's do this. Let's say I alert at 485. Okay. Blah blah blah. And it's at 515. You have to
Mhm.
ask yourself, am I willing to pay $30 more for this
Mhm.
contract? For a scalp? Probably not.
Mhm.
Most likely, definitely
No.
not. Now,
Yeah.
if it's a contract 3 months out, 2 months out, $30 actually is probably not that big of a difference. It's not going to be
Okay.
that big of a deal. But it's however much you're willing to risk at the end of the day. So
Okay.
you never want to rush the entry, right? Yeah, you want to obviously get into that play and have a chance of making money. But just because you can't fill at 485 doesn't mean you want to sell at the limit because it's gonna, or the ask because it's gonna fill. You want to start at the
Okay.
lowest and then try to fill at the lowest price possible. That way you can,
Possible.
buy for as cheap as possible. Exactly.
Okay. Okay.
Yep.
Thank you.
No worries.
Thanks.
Hey man, just wondering for like the contract dates, like, do you know, is there like a preference on like when we should get into a contract, like far from expiration versus like closer to expiration,
So,
or?
yep. Yeah. So with stocks like AMD, right? So AMD doesn't move that much. Okay, let me see if I can change. I don't know why isn't this. Oh, I guess this is. Oh, here. Let me do this. You see AMD's expected move right here.
Yeah.
So by June 11th, AMD is saying that it might only move up or down 3 points. Okay. If you're bullish on AMD, you don't want to get an 85 call for June 4th or June 11th because it's saying that AMD it's maybe going to go up 3 points either to the upside or downside. That's why I want to put as much time as possible because it's saying now this is not always, you don't always rely on this. It's just giving you an idea of how much AMD can move, right? But with slow movers, you want to put as much time as possible. Now, if you look at a stock like Nvidia on a weekly basis can move over or under 17 points, right? So even if if Nvidia is at 671, right? You still have a chance. The delta is not as high, but you still have a chance for Nvidia to go to 680, even 685, right? That way you can
Right.
buy, a week or a weekly contract, and they're a little cheaper, right? But look, if you want to get a long Nvidia for this, almost the same strike, you're obviously going to be paying a lot more, almost 5 times more.
Mhm.
But you see the expected move over under is 120 points.
Yeah.
So it's saying that it has a big move, by the time it hits, September. So you'll get used to it, Chris, when you'll start noticing stocks that move and stocks that don't move. Another example, Palantir. People ask, is a Palantir 29 call for June 11th or June 18th a good contract? Well, ask yourself. Palantir over under is only 2 points. So the chances of Palantir getting to 29 is almost impossible. Now you can actually put a probability of going in the money on TOS. You go to layout, you customize, and you can add it. So a 29, TOS is saying you have an 11% chance, right? But that's when the Greeks
Mhm.
come in play. I like buying contracts with more than 40 delta, right? Because it's either almost in the money or close to in the money, right? And then theta is much lower as well. So at the end of the day, you'll start getting used to, figuring out what stocks move and what stocks don't move, right?
Right.
And that will really determine the contracts that you can get.
Okay.
I mean, even
So it's kind of
Apple.
like oh, sorry.
No, you're good. I mean, even Apple. You think Apple's a huge company, right? And a lot of volume, but the expected move on Apple is nothing.
Mhm.
So you really get used to what you're looking at.
Okay.
Hmm
So like as like a general rule of thumb, I'm still learning. Like
Yeah.
for a faster mover for moving, I guess companies, you could get a contract closer to expiration, whereas like the slow movers, like I guess like Palantir or Apple or
hmm
AMD, you could do further like a contract that's like has a long expiration,
Yeah,
right?
yeah. I mean, don't get me wrong. You
Okay.
can always buy a longer expiration for fast movers too, but again, you're gonna pay a lot more. That's the only
Okay.
reason why, you can make or you can play like Nvidia weekly because Nvidia will move, right?
Uh,
And by all means, you can play Nvidia monthly contracts, but you're just going to be paying 5,000 plus a contract, right? But with the slow movers, you really want to avoid weekly contracts because you'll start to realize how how theta really impacts your premiums. That's why when I alerted Palantir, I mean, at Palantir, I did a September, right? Because I know that Palantir barely moves, and I'm capturing a high delta. The 22 call is a 0.69 delta, right? And that gets
mhm.
higher and higher as you get closer to the strike or past the strike. So at the end of the day, stocks that don't move, put as much time as possible and still get as close as to the underlying.
Okay.
hmm
All right. Thanks, man.
Yeah, no worries.
And when you mean like close to the underlying, sorry, you
Yep.
mean
As in the stock price, the current stock price.
okay.
Yep.
And that's for the slow movers,
That's
right?
that's for the slow movers. Yep.
Mm,
So okay, so actually that's a good example. So Nvidia, let's do that. Let's say you want to get like a July um contract, right? So you want to get at least a month out on Nvidia.
Okay.
So even if it's out of the money, right? So Nvidia is expecting over or under 72 points. You know, again, they're very expensive for out the money. For a 40 delta, that's just my rule of thumb. Again, you can buy these, right? Because look, if you bought this yesterday, you would make 500 per contract, even though it's out of the money. But then again, when you bought it, it was at 1,300, so you risked $1,300. So you can still buy out the money contracts. You're still going to be paying a lot, right? And the deltas is not as high. Um, it's just how much you're willing to risk at the end of the day.
Okay.
hmm
Cool. Thanks, man.
Yeah, no worries.
That's it.
I think we'll end there. Again, if you guys have any questions, put in the questions tab. I will upload this to YouTube because I know Discord will not let me put this straight into Discord. And then I will post the link in the class recap section. Thank you guys for sticking with us, and then hope you guys learned something, and let's get ready to trade tomorrow.
Oh yeah.
No
So,
worries.
Amina, that is yours.
Thank you so much.
No worries. No worries. All right,
Thank you,
guys.
Brian.
No worries. Have a great night. Thanks, Elkin. Thanks, Shane. Thanks, everyone.
Good night.
See you guys tomorrow.
See you guys.
Mhm.
Good night.
Good night.